Okay, so we have entered the GL entries. We'll be heading towards creating a cost center, controlling, cost center accounting, master data, cost center. Let's first check the standard hierarchy. Standard hierarchy. Okay, this is standard hierarchy for, okay, okay, okay. S RG50. I just changed the controlling area from another controlling area to RG50. So we can actually know what is in the standard hierarchy of cost centers. Now, what do we use cost centers for? We don't have a cost center. Okay, cost center hierarchy RG50. RG50. We click. Okay, cost center group. We can create cost centers from the standard hierarchy as well. This is temporary 01. No, okay. Let's make SC001 South admin. South admin. Gym. Cost center category. Now, there are different categories. It can be for production, it can be for admin, it can be for non-operational areas, marketing. So we also have for production as well. That is for use for costing. So we'll actually use this for admin. Okay. Save. Okay, your data has been saved. Okay, and it is also activated as well. So let's check it out how to create master data from outside the hierarchy. Now, why do we use cost centers? To capture expenses, to capture costs of departments. Okay, so we'll make another one, NC001 11-2003. Okay, um, not admin, not admin. Person responsible, Jim. W hierarchy area is by default RG50. Currency EKR. Profit center. Now, profit center, what are profit centers? Cost centers report to profit centers. Okay. Controlling area is RG50. We want to search profit centers. Search. Okay, we have N01 North and cost centers which are not assigned a profit center are automatically assigned to dummy profit center. That is the behavior of SAP. Cost center has been created, more cost center, change SC01, and we will assign a profit center. Which is South. Save, save. Okay. NC01, change this to USD. Yes, save. Now we have two cost centers. Okay. Now, moving ahead, we have been seeing entries in accounting, general ledger, document entry, account assignment model, FKMT. Account assignment model, let's say you want internet charges. Okay. Create, it's already created. Let's say ECL net create. Okay. Currency USD RG50, sample text. PTCL broadband per month 500. Okay. Line items. That's very easy. Posting key 40. What is posting key? Posting key 40 is debit of GL. So for every module, sub-module, we have a posting key, which is debit and credit. Now, speaking of 40, this is GL, G for GL, debit entry. 50 is GL, credit entry. If we speak of material stock initial entry 80, consumption 84, that is GL debit. So your integration for material will actually happen through finance. So the GL that is at the back integration of will consume material with a debit entry. Stock inward movement for material 89. Stock outward movement material credit 99. Okay, so that's how SAP has simplified debits and credits. Okay, so 40 is GL, RG50. GL will be, of course, internet expense account, for example. Okay, petty cash, petty expense, input sales. Okay, we don't have an account for that. We'll make another one. We'll take another one just to understand. And this is SC001. Amount is 500. 50 is credit of GL, RG50, 10101. Cost center is to capture expenses. So cash will not have a cost center. Okay, 500. Okay, save. Account assignment model was save. PTCL net. Now, how do you use this? Go to F-02, post with reference, account model, sorry, account model, yeah. Account model, select account model PTCL net, and we'll see what do we have. How many models do we have? PTCL net, net USD, insurance, and so on. Okay. So continue, and will automatically charge everything on its own. Save, enter. Is not permitted for account 30201. Why? Because I'll tell you. Because we have KS02, that is cost center, edit. C001, South admin, control, and SC001 is 1/1/2003. Okay, actual revenues, non-revenues. Save, SC001, enter. Entry is not permitted for account 30201. Oh, okay. Now this is something we have to change from FS00, and it is saying it is not allowing cost center to be here. Petty expense. We'll edit this. Control data. Okay, G01, no. We want cost accounts. Adjustment accounts. Revenue accounts. Material consumption, material, transport, plant, clothing. Cost accounts. Cost owner, clearing, manufacturing cost, cost of fixed asset retirement, reconciliation, cost account. Okay. I want, let's say I put this here, G04, data saved, and let's do this entry again. Channel posting, account model, Continue. ST01. Save. Enter. Define a cost center for account 30201. Okay. So what is the cost element? Let me tell you that primary cost or revenue. Control data. Cost element category 01. Save. Let me explain what is the cost element. Notepad. Okay. Now, new share. Okay. GL and cost element. What is this? Now, GL is basically for financial entries, but a cost element is mirror copy of GL, but for costing of material. Okay. So if a GL is 30201, a cost element will be 30201 because what it will do that this is the GL, this is cost element. Okay. So whenever you are posting an amount, it will transfer to a cost center or it will book it in that cost center. Okay. Later on, this cost center will transfer, allocate, distribute these costs to a production cost center or a production order or a process order or internal order. Now, what is internal order? Internal order is just like a temporary production order. Okay. So, cost element category has been made. Okay. Now let's go to creating that entry. Save, enter, define a cost element. You'll have to do this entry again. Account type, just say net. Okay. Save, enter. Document was posted because we actually created an account document mode. Okay. As simple as that. Okay. FB01L. Now, why do we have a ledger group, for example? A ledger group. Let's explain that as well. Ledgers. In SAP, there is a universal ledger which is called 0L. This is the universal ledger or the leading ledger. Then we have standard ledgers and extension ledgers. Extension ledgers copy values from standard ledgers. Why do we need ledgers? Ledgers are needed for group valuation or reporting, uh, legal valuation, and profit center valuation. In SAP, any number ending, oh, sorry, this is the other way around. Legal valuation, group valuation. Now, what is legal valuation? Now, legal valuation is a value of your business in balance sheet, in financial statements or cash flow or P and L accounts. Okay, that's legal value. Group valuation, reporting at the group of companies level. Profit center valuation. What is profit center? Profit center is internal management reporting requirement. Okay. Now, what is internal management reporting? For example, profit center can be demographic. For example, we have created north, south, center, and our business is apparel. Okay. And in apparel, we have divisions like summer, winter, fall. Plus, we have categories like men, women, children, and accessories. So, based on this, what we want to see that profit center Singapore for September, what was the sales for men for in summer collection? Plus, we want to see cost of goods sold. Okay, and how much of material quantity was consumed to produce men's summer collections. What is the cost involved? How much material was consumed? So this is profit center in very simple language. So we have three valuations in SAP: legal, group, and profit center valuation. Okay. So that's why we have ledger groups. So another requirement that a ledger fulfills is different currencies. Okay, like your company code is USD, but you want to report in Singapore in Singaporean dollar. So you will have either an extension ledger or a standard ledger. Okay, and you have the option either to enter manual entries in extension ledger or not. Okay, so we have ledger groups 0L, okay, 30201, enter, and NC001, amount is 112, okay, and let's say 11112. Again, posting key 10101, enter, star, enter, and it will copy the amount. Okay, display document overview, post 105 was posted. Now, what I can do if I have a ledger group, I can use this in PKR and I can post it to another ledger, right? So this can be done for in another ledger. That's the use.